Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 3rd, 2026, and we're diving into MPLX's fourth quarter and full year 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. MPLX has reported some interesting numbers this quarter, and I'm excited to break them down for our viewers.
Revenue and profitability overview. Let's start with the top line. MPLX reported a net income of $1,193 million for the fourth quarter of 2025, up from $99 million in the same period last year. John, what are the key drivers behind this growth?
The increase in net income is primarily driven by higher adjusted EBITDA, which came in at $1,804 million compared to $1,762 million last year. This growth is supported by strong operational performance and effective cost management. Additionally, MPLX generated $1,496 million in net cash from operations, which is a solid indicator of their cash-generating capabilities.
And what about their distribution strategy?
MPLX declared a distribution of 1.0765 per common unit for the quarter, maintaining a healthy distribution coverage of 1.3x. This reflects their commitment to returning capital to unit holders while ensuring financial stability.
Segment performance analysis. John, let's delve into the segment performance. How did MPLX's different segments fare this quarter?
The crude oil and products logistics segment saw an adjusted EBITDA increase to $1,175 million, up by $52 million from last year. This was largely due to a favorable FERC tariff ruling and higher rates. However, the natural gas and NGL services segment experienced a slight decline in adjusted EBITDA to $629 million, primarily due to asset divestitures and lower NGL prices.
What about their operational metrics?
Pipeline throughput increased by 1%, indicating steady demand, while terminal throughput saw a slight decrease of 2%. These metrics highlight MPLX's robust infrastructure and ability to adapt to market conditions.
Strategic initiatives and future outlook. Looking ahead, MPLX has announced a significant growth capital plan for 2026. Can you tell us more about their strategic initiatives?
Absolutely. MPLX is investing $2.4 billion in organic growth, focusing on expanding their natural gas and NGL value chains, particularly in the Permian and Marcellus basins. This is expected to drive mid-single-digit adjusted EBITDA growth. Key projects include the Secretariat II gas processing plant and the Marcellus gathering system expansion, both of which will enhance their processing capacity and market reach.
How do these initiatives align with their long-term goals?
These investments are aligned with MPLX's strategy to strengthen their infrastructure and meet the growing demand for natural gas and NGLs. By focusing on high-growth areas, MPLX is positioning itself for sustainable long-term growth and value creation for unit holders.
Financial position and liquidity. John, let's discuss MPLX's financial position. How does their liquidity look?
MPLX is in a strong financial position with $2.1 billion in cash and $2.0 billion available on their bank revolving credit facility. Their leverage ratio stands at 3.7x, which is within their target range, indicating a stable financial structure. Additionally, they repurchased $100 million worth of common units in the fourth quarter, demonstrating confidence in their financial health and commitment to enhancing shareholder value.
What does this mean for investors?
For investors, MPLX's solid liquidity and strategic repurchases signal a well-managed balance sheet and a focus on returning value to unit holders. This financial stability supports their growth initiatives and provides a cushion against market volatility.
EPS forecast and analyst expectations. Now let's talk about earnings per share. MPLX reported an EPS of 1.17 for the fourth quarter, beating the forecast. What does this tell us?
This EPS beat by 9 cents is a positive surprise, reflecting MPLX's strong operational performance and effective cost management. The forecast was based on a survey of 5 analysts, and exceeding these expectations indicates that MPLX is executing well on its strategic initiatives and financial goals.
How might this impact investor sentiment?
Beating EPS expectations generally boosts investor confidence, as it suggests that the company is performing better than anticipated. This can lead to positive market reactions and potentially drive the stock price higher as investors reassess MPLX's growth prospects.
Key takeaways. As we wrap up, let's summarize MPLX's performance. John, what are the key takeaways from this earnings report?
MPLX delivered a strong performance in 2025 with a net income of $4.9 billion and adjusted EBIT of $7 billion. They invested $5.5 billion in growth and returned $4.4 billion to unitholders, demonstrating their commitment to both expansion and shareholder returns. Looking ahead, their strategic initiatives and solid financial position set a positive outlook for 2026.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on MPLX's performance in the comments below. Until next time.